Hello and welcome to the trade setup. In this video we are looking at silver. It is time for another update. We will also be taking a look at gold as always, but let's get into the actual structure here, and today we will forego the large time frame explanations. We focus strictly on the smaller time frame. If you want the full details, I do encourage you to watch the previous videos, however, because nothing has really changed. We are still tracking the same patterns. And in fact, we are still tracking the same setup I have provided to you in the previous video, where we have identified a possible bottom within this as an A, B, C structure, right? We didn't require any further lows, and not only that, but we have even identified an initial 5-way move to the upside within this structure that was suggesting to us that with high probabilities we should expect after a 3-wave correction into the support zone at least another 5-way move to the upside, right? This could have been within the idea of an ABC pattern, if not something even more bullish. And even though we have managed to form on the silver chart one additional high, I am not satisfied with this. I would not consider this to be a wave C because the structure simply doesn't allow for it. The wave C must be a 5-wave pattern. So all I could really expect at this point is either that I would be looking at a reset within our current correction, which is still a possibility as we are still holding the levels of support, we can still track this pattern, or a failure where this would have worked out into something like a WXY pattern that would in fact rather be suggestive of continuation to even lower prices in the case of the silver chart, where yes, this could be an extension, this could work out in quite a few ways, but we would primarily be expecting to build a 5-wave pattern to the downside that could lead to significantly lower prices. Nonetheless, as I was saying, we are still holding the levels of support and we can still trust the support zone for one additional high at the very least. We would still need to see a sustained break below $73 for this to change, and we have gotten a break below it, but that was not a sustained break. This was basically just a week below that level. From that point of view, we can still expect continuation to higher prices, but we do actually need to consider the structure that has formed from this low, because the pattern up isn't really suggestive of a more substantial bottom being in place. This, what has formed in this movement, is no confirmation. In fact, this is exactly what I would typically expect of a 3-wave correction within something like a 1-2 structure that would allow me to instead track continuation to lower prices, that would rather tell me watch out for the levels of resistance within a potential wave 2 that would lead to lower prices. So I would be watching here the levels between $74.4 up to $76.3. We have basically pushed into the 50% retracement a couple of times, the first time getting rejected immediately, and then we have managed to get a week above it, but nothing sustained, and we have already formed a much deeper than ideal retracement. I have to say, based on the internal structure, I cannot favor the white scenario that would allow me to look for direct continuation to higher prices. I do not necessarily have a strong preference for the red interpretation because this would fit very well into something like an A, B, C pattern. But at this point, I cannot have the same high confidence that this structure will ultimately work out. And I need to be waiting for the evidence, and the only evidence that I can now trust based on the structure that has formed is to actually get a sustained break above the 78.6% retracement, above $76.3. We have quite significant structural resistance at these levels. We've actually struggled for quite some time to get past these levels and even got rejected a few times in this area, right? So it is going to be a challenge, but this is what silver needs to do to provide more confidence. So we can actually stop here with silver. We will move on to the gold chart now. And similar story here, we have identified an initial 5-way move to the upside. We've had this as a potential wave 1, and we have been looking for a correction within a wave 2. The levels of support likewise haven't been broken in the case of this chart. In fact, we have built exactly what we would like to see. We have built a 3-wave correction to the downside quite clearly, and we are looking at the same bearish structure as we are on the silver chart here, because we do not have a potential initial 5V move to the downside, as we don't have an overshoot within a wave B here that will allow this to be a 1, 2, 3, 4, and a 5 within a wave 1 instead of a wave C. And not only that, but we are actually holding higher levels of support in the case of this structure. So we have actually gotten the same downturn a couple of hours ago, but it hasn't seen nearly as much downside. We are holding still above the 61.8% retracement, and I would have an easier time seeing this succeed in forming the next high. But to be clear, since we only can clearly see 3 waves to the upside in this movement, I cannot be looking for this to form a wave 3 directly. Right? We have actually formed a lower low in the case of this movement to the downside. So all we can really track is either an A, B, C pattern, same as on the silver chart primarily. Then there's the option, this would be building instead a 1-2 setup. I don't really like either of these interpretations, the idea of a wave C, not because it is rather unlikely, but because it would require a pretty large leading diagonal within this supposed wave 3 in yellow that we would like to see play out for the gold chart. And yeah, then I would have to see something like a 1, 2, 3, 4, and a 5 build in the case of this chart, have a large 1-2 setup. And it's really not ideal for the type of pattern we want to see form in the case of this chart. And the issue with building a wave 1 in the case of this structure would be that it would be a pretty sizable wave 1. It would actually have to be, which is just generally not what we are looking for in the case of a wave 1, even of a larger structure. It can actually work out, but it's just not ideal. So we aren't looking at any type of ideal structure here, but one thing remains clear. We would still like to hold the 78.6% retracement in this white area of support if we are to continue this movement to the upside directly. And if we see a sustained break below it, we might need to rather expect a complete reset of this larger wave 2 in yellow. That wouldn't actually be a problem. We would still have room within the yellow area of support, and we would be able to maybe build something even more reliable. Although, I have to say, this initial movement to the upside would have been quite great to have our base for the next leg up as part of the larger wave 3 in yellow. One more thing to notice before we stop though, is that we have actually bounced off of the 50% retracement in this descent to the downside. It is not uncommon at all to find support at the larger Fibonacci levels, and it is actually a sign of strength. But for now, we will stop here. These are the levels. This is the trade setup. I hope you enjoyed the video, and if you did, don't forget to leave a like, subscribe, and if you enjoyed the content and want to support it directly, check out the channel membership, and I'll see you in the next one. Bye bye.